Markets look calm, but is something building underneath? If you just glance at the board this morning, it doesn't look like much. Corn's green, beans are firm, cattle pushed higher, hogs steady, crude sitting quietly in the mid-60s. Nothing screaming panic, nothing screaming breakout. But here's the part that should make you lean in a little closer. Markets often look the calmest right before they decide which direction they're actually going. Right now, grains are trying to stabilize, cattle keep finding buyers, and outside markets aren't interfering. That combination doesn't last forever. So the real question this morning isn't whether things are up or down. It's whether this calm strength is building a base or setting up the kind of move that catches producers off guard. Let's walk through it. Good morning. This is Boots and Bushels, your daily look at the markets that feed America. We're using where futures were trading near late yesterday afternoon as our guide. These are watch list numbers, not official settlements. Just where trade was sitting as the session wrapped up. No noise, no spin, just what shifted and what could shift next. Let's start with grains. Corn is trading near 442 even, up about 3 on the session. On the surface, that's not dramatic, but what's interesting isn't the size of the move, it's the behavior underneath it. Every time corn leans lower lately, it doesn't accelerate downward. It finds buyers, not aggressively, not emotionally, just steady support. That tells you something about where value is perceived. Now, is this a breakout? No. Volume hasn't exploded. There wasn't some shocking headline. It wasn't a runaway rally, but it was a controlled strength. And controlled strength after weakness is often the first step towards structural improvement. The bigger thing to watch today is whether corn can hold above 440 area convincingly. When markets hover around psychological levels like that, it becomes a test of conviction. If buyers defend it again, that builds confidence. If it slips back through and stays there, then we're still stuck in a range. Right now, corn feels like it's trying to build a floor, not launch higher, just stabilize. And stabilization is important this time of year, because once planting discussions and early weather forecasts start creeping into the narrative, markets that already have footing react faster. Corn isn't urgent this morning, but it is watching. Beans had more energy than corn yesterday, and that's worth paying attention to. Soybeans have felt heavy at times recently. Every rally attempt ran into selling pressure, but yesterday's action didn't feel defensive. It felt constructive. There wasn't a massive catalyst driving it, which is actually interesting. When a market strengthens without a headline, it often means positioning is shifting quietly. Now, that doesn't mean soybeans are about to explode higher, but it does suggest that downside pressure isn't as dominant as it was. The key here is follow through. If beans build on this and hold above that mid 1160s zone for more than a session, tone improves quickly. If they stall and drift back lower, then this was just short covering noise. Right now, soybeans are sitting at a crossroads. They're not in trouble, but they're not free either. When a market pauses like that, it's usually waiting for something, weather, exports, or outside influence, to tip it. May oats are trading near 326 even, down about 2, not driving the grain story right now. Thin trade, minor pullback, nothing signaling broader stress. April live cattle were trading near 240.30, up about $1.20. That's strength, not just noise. Cattle continue to behave like supply tightness still matters. Every dip seems to attract buying interest. That's not something you see in fragile markets. Now, could we see volatility? Of course. But the bigger picture in cattle hasn't broken. And when market continues to respond positively to dips, it tells you confidence hasn't disappeared. The real question becomes sustainability. How long can this strength persist without a new catalyst? If packer margins shift or demand slows, that change tone fast. But as of yesterday, buyers are still comfortable stepping in. That says something. May feeders were trading near 360.50, up just over $2. Feeders continue to show resilience. When feeders hold strong alongside firm live cattle, it reinforces the idea that the supply conversation is still intact. Now that doesn't mean straight up. Markets rarely move in straight lines. But this doesn't look like a market that's rolling over. It looks like a market being supported. And supported markets require something meaningful to knock them off balance. April lean hogs were trading near 96.20, up about 40 cents. Hogs have been steadier, less explosive, less dramatic. But holding near the 96 level keeps the tone neutral and slightly constructive. There's no sign of aggressive liquidation, and in quieter livestock markets, stability often precedes directional expansion. April crude oil was trading near 65.52, slightly lower on the day. No major push, no collapse. Energy isn't dictating the ag narrative right now, it's present, but not driving. If crude suddenly breaks out of this range, that shifts conversations. Yesterday it didn't, so energy stays in the background. Weather remains cooperative for now, and cooperative weather removes urgency. Markets don't react strongly when forecasts are steady. They react when tone changes. Right now, there's no immediate scare in the maps. But here's the thing, markets don't need extreme forecasts to move. They just need subtle shifts. If forecasts lean warmer or drier than expected, even slightly, grain markets react early. Not because conditions are already severe, but because risk perception changes. For now, weather's quiet, but quiet weather in a late winter doesn't mean quiet forever. There are three broader forces sitting underneath these markets right now. Number one, export pace. Export demand hasn't collapsed, but it hasn't exploded either. The middle ground creates tension. If exports surprise stronger in the next round of reports, corn and beans could build on the stabilization. If exports disappoint, that range tightens again. This is a lever that hasn't fully moved yet. Number two, livestock supply dynamics. Cattle numbers continue to reflect tightness in certain segments. Supply-driven markets don't shift overnight, they grind. And cattle right now feel like they're grinding, not peaking. Until something materially changes supply perception, that support remains part of the story. And number three, outside markets calm. Equities and macro markets haven't thrown chaos into ag this week. That's actually healthy. It allows agricultural markets to respond to their own fundamentals. When outside volatility is low, internal structure becomes more important. And internal structure in grains and cattle right now looks stable, not explosive, but stable. Let's talk about three developments producers should have on their radar this morning. Export activity is showing mixed signals. Recent export activity has been steady, not explosive, but not collapsing either. Shipments continue moving, but the pace hasn't accelerated in a way that forces the market higher. That middle ground is important. When exports hold steady, it keeps a floor under prices. But without acceleration, it's hard to build momentum. Why that matters right now, corn and soybeans are sitting in stabilization mode. If export demand surprises to the upside in the next reporting cycle, it could give buyers the confidence they've been waiting for. If numbers slip instead, this range gets tighter fast. What to watch? Look for any uptick in weekly commitments or unexpected destination buying. Even a moderate increase could shift tone quickly. Number two, cattle supply conversations continue to tighten. The broader livestock conversation hasn't changed dramatically, but it hasn't loosened either. Feedlot placements and supply discussions continue pointing toward tightness in certain weight classes. That underlying constraint is part of what's keeping feeder cattle supported. Now, this isn't new information. The tight supply narratives don't disappear overnight. They fade gradually. And right now, they haven't faded. Why it matters. When supply remains constrained, markets don't need massive demand to stay firm. They just need stability. What to watch? Any shift in placement trends or packer margins. If margins compress sharply, it can change bidding behavior fast. Number three, whether risk is quiet but being monitored. There hasn't been a major weather scare yet, but traders are starting to look ahead. Even subtle forecast changes, warmer, drier, or uneven precipitation patterns can move grain markets before actual conditions deteriorate. Markets don't wait for drought, they react to forecast direction. Why this matters now? If forecasts stay cooperative, grains likely continue building slowly. If outlooks tilt riskier, that stabilization in corn and beans could turn into momentum quickly. So what to watch? Any forecast adjustments that lean consistently one direction over multiple updates. Consistency is what shifts psychology. Markets rarely shout before they move. So what is this? This morning doesn't feel like a breakout day. It feels like a setup. Corn trying to stabilize above 440, soybeans building modest strength, cattle holding gains, hogs steady, crude quiet, weather calm. That combination doesn't scream, move now, but it does create the conditions for one. Because when multiple markets stabilize at the same time, the next catalyst carries more weight. If exports pop, grains respond. If weather shifts, grains respond faster. If cattle lose footing, livestock adjust quickly. Right now, we're in the calm part of the cycle. The question is how long it lasts. What I'm watching for today, does corn defend that 440 area? Do soybeans build above 1165 or fade? Do feeders stay firm above 360? Does anything in weather maps change tone? Those answers shape the rest of the week. Markets rarely shout before they move, they usually whisper. And this morning feels like a whisper, not panic, not euphoria, just quiet firmness. But quiet firmness in late winter has a way of turning into volatility once something shifts. We'll see whether this stability builds or whether it breaks. I'll walk through it again tomorrow morning. This has been Boots and Bushels, your daily look at the markets that feed America.